The sectors we are most attractive at present, given the country reality, is our transition to renewable energy. We need to, in a big way, transition to renewable energy because right now we are so dependent on fossil fuels for generation. The government has made a lot of renewable projects are being bidded out.
The Colombo Stock Exchange indicated that board is responsible for having ESG policies and it needs to be published in the website. So I believe slowly regulation is also coming on board taking responsibility.
We need to use technology wisely. That will make it more efficient. What we have covered is overall boardroom agenda of ESG, absolutely important. I'm a firm believer that sustainability needs to make sense to the business. I always say sustainability, let's make sustainability work for the businesses and businesses work for sustainability. It's not one way. Never.
Climate change has made ESG or environmental, social and governance factors a force in investing. Hello, you're with Echelon's Decision Points and we're discussing the forces shaping the global ESG agenda. And in the studio with us are Shailesh Tyagi, who is Senior Partner of Climate Change and Sustainability at Deloitte South Asia. Also here is Ruvini Fernando. Ruvini is Head of Strategy and Transactions at Deloitte Sri Lanka and the Maldives. And also here with us is Zahra Cader. Zahra heads Climate Change and Sustainability at Deloitte Sri Lanka and the Maldives. A warm welcome to all three of you. Let's start here. Let's start with where the ESG conversation is at the boardroom. And each of you bring a slightly different perspective. Shailesh, you bring an Asian perspective. And if you look at this broadly, Shailesh, what's happening to the ESG conversation at the C-suite?
No, it's a great question. It's definitely a boardroom agenda, right? I mean, wherever I go, sustainability, climate change, is the hottest topic at the moment. And what CXO expects. So think about sustainability, not from the lens of doing something good for the environment. That's absolutely required, absolutely important. But please think about looking at sustainability from the lens of capitals. When you go to the boardroom and the CXOs, they want to manage financial capital, absolutely important. But they want the financial capital to be managed by very strong governance. Systems and processes, monitoring, measurement, and also understand how you maximize your human capital, how you maximize your relationship, the social capital, and how you manage the nature resources in the best possible manner, effective manner. And that's common sense, right? But then they say, okay, how I can bring everything together? How about I come up with something called environmental, social, and governance? When you look at this from that capital lens, then you think about, so what do I need? I need to manage my business from the lens of ESG in an integrated manner. The financial capital is well managed through annual reports. How can I also understand what am I doing and impact through a reporting mechanism? And that's called sustainability report. But reporting is an outcome. There's a lot you need to do. You need to have a very clear strategy. With that strategy, you need to have sound policies in place, a steering committee maybe, right? You want to make sure people's payouts are dependent on sustainability performance in one form or the other. You want to have clear interventions, roadmaps, short, medium, long term, and they're real, they're measurable, no greenwashing. And then once you have done that, then you want to understand your supply chain, your value chain. Because at the end, when we think about, take one example, climate change or greenhouse gas emissions. Those greenhouse gas emissions are mostly outside your operational control. If they're outside your operational control, how can you fetch the right information and still report as your own? So that's one of the challenges. Now, this is one aspect. The second aspect is why you would go and discuss this at the CXO forum. You'll discuss this at the CXO forum because you want to understand what are material aspects of ESG that are impacting you and your own company actions, how they're impacting the world. So what are those? Let's talk about Sri Lanka, right? Or South Asia, or middle income countries. Climate risk, physical impacts on installations, infrastructure, sectors, critical sectors. Think about access to capital. Now, anything you want to do today and you want to access capital, those funds, whether there are ETFs or you're looking mutual funds, they're backed by Global North, right? And they're backed by ESG-minded equity. And when they come into that, they want to make sure that you have some sort of ESG lens into your investments, means performance. Finally, it's a globalized world. You have export markets, and those export markets want you to perform in a manner that you know what you are doing. It's awareness as a starting point. And you won't be aware if you're not measuring what you're doing. So if you look at it from this lens, that's currently the boardroom agenda.
Sure. Ruvini and Zahra, I'll bring you in on this, and perhaps you can provide to us a uniquely Sri Lankan perspective on this. And Shailesh talked about, the ESG agenda is, in a broad sense, twofold. There is the strategy and there is the reporting. And I think we're talking about both aspects here, right? How would you like to frame this conversation in terms of what you're seeing at the boardroom? How's the boardroom agenda currently in Sri Lanka being driven around ESG?
Shamindra, I feel that the boardroom conversations currently, it's encouraging actually to see that ESG has become a part of it. It's actively being discussed by many of the larger corporates especially. But what we see is that there is a divide between the two. So there is business as usual and the commercial aspects of business. And then there is another segment called ESG. So it's what I really see in practice is that level of integration is increasing,
Sure.
but it needs to increase.
Sure.
So over the years, our boardroom conversations have recognized different aspects of competitive advantage we have to build within Sri Lanka as Sri Lankan businesses to be able to go out and be competitive. Now, sustainability becomes one of those sources of competitive advantage, which needs to get integrated into our strategy. So it kind of needs to cut across strategy and not be sort of a separate item on the agenda.
Sure.
So it needs to just cut across and be a part of the entire
Is
thing.
that what you're also seeing, Zahra, in your interactions with Sri Lankan companies? So we are at a stage, it looks like, where boards or the C-suite is trying to make sustainability a core part of strategy, and it's a journey ongoing.
Yes, like you rightly said, it's really a journey. And like Ruvini also alluded to, it's something that boards are increasingly taking up. And just to kind of elaborate a little bit further on Ruvini's topic, when you look at ESG, it actually cuts across. Look, it is about investor relations on one side, it's about finance, it's about communication. So the siloed effect is the issue.
Right.
Bringing everyone together and also understanding it is part and parcel of your business strategy. At the moment, like Ruvini said, the bigger companies are anyway taking up ESG related aspects and there's been progress. And I feel with the regulatory changes and also more recently, the Colombo Stock Exchange also indicated that board is responsible for having ESG policies and it needs to be published in the website. So I believe slowly regulation is also coming on board taking responsibility.
If you look at the broader factors driving this, obviously there's on one side there's regulation. You talked about the competitive advantage, ESG or environmental social governance practices being a competitive advantage. Shailesh, what do you think are the factors driving this integration of ESG into core strategy of a company?
That's a brilliant question. Think about the way sustainability has evolved, right? When you go and talk to companies, the CFOs, the CEOs, investors, I'm talking about stakeholders, wider stakeholders. Gone are the days when you have to go and prove to them climate change is happening, right? Now it's more about, I know it's happening. Now tell me how I can make money out of sustainability. And that's a great starting point. Means how I can embed my sustainability expectations from my own self, from my staff, from my value chain in a manner I conduct my business and I move away from compliance, absolutely required as a first step. Harm minimization, solid ESG management systems in place, and I move towards value addition. I think about circular economy, right? I think about doing business in a manner that there's a particular focus on waste, as one example, on water, critical resources, energy, move orderly, low energy carbon transition, orderly. And those conversations have started to happen purely because it makes perfect business sense to do that. So that's the starting point. Let's see a closed loop system. Then think about what I can learn from the best. Companies are maturing. Company may be great as a big conglomerate, but then there are pockets of excellence, how you can learn from it. Just one example. Over the years, when I was at Deloitte Australia, for a few years, I used to fly to Thailand and run idea incubation workshop called Greenhouse Lab for Siam Cement Group, SCG, massive group. That company literally went on this pyramidal approach, comply with the requirements of stock exchanges, voluntary requirements of GRI, Global Reporting Initiative standards on reporting, rating agencies, of course, sound management systems in place. For that value add, they ran those workshops, which we ran for them. From there, if you read how they are moving towards, say, cement polymers as one example, right? Innovation. Taking the research and R&D in a direction that you make money, reduce the impact, and also it helps you in marketing your product, right? So it's a win-win. I can say the same about Toyota Thailand. I can say the same about few companies in India, Sri Lanka. So think about embedding in a manner that you comply with the requirements, but you think about value add.
I suppose if you approach that conversation in that fashion of, there's compliance, there is harm minimization, that's great to do. But really bring the value addition to the table. I suppose that is more compelling proposition for whoever you're talking to, right, Ruvini? How's that conversation going in Sri Lanka, do you think?
The value addition, Shamindra, I think would come, in my view, in three ways.
Sure.
One is Sri Lankan companies, naturally, as a consequence of the economic crisis we faced, would be requiring more capital, right? So when you look at the sources of capital available, the sustainability-backed capital pools in the world are growing at a tremendous pace. So access to capital is one of those value additions that many corporates would see. The next point would be actually many corporates are attempting to be export-oriented and globally competitive. And then in the end markets, you see that there is a requirement for sustainability to be very much a part of your business agenda. So therefore, it makes sense to embed that into our strategy as well. The third aspect I see is the emerging generation. When we really look at our stakeholders, the younger consumers, the new people who are joining the workforce, we know that the younger generation, the so-called millennials and Gen Zs, are much more conscious about this conversation. And therefore, we are building businesses for the future. And then we need to be sensitive and we need to address what they see as important and what they will be looking at or expecting the companies to be doing if they are going to engage with those companies.
Zahra, if I bring you in, and Ruvini is talking about three drivers of the conversation in Sri Lanka, the pools of capital that are ready to be deployed on sustainability agenda are growing. Exporters need, if they want to be competitive, they need to be and linked with the value chains, they need to be thinking of this. And of course, emerging consumers care about sustainability more, right? But when you're looking at the conversation here, what do you think are the gaps? Right now, Ruvini is identifying three broad areas. What do you think are the gaps in the conversation here, Zahra?
Some of the areas, this is not really a gap, but what I'm trying to also allude it to based on what Ruvini said is, look, the challenge really here is, although people do know the value of sustainability, sometimes there is a dilemma between looking at the short-term requirements, performance requirements, and then looking at long-term funding for sustainability. So bringing that balance between the two is a dilemma for lots of businesses.
Sure.
So that's something we've seen sometimes. where corporates are not necessarily taking up because they do see a challenge between meeting short-term performances. And what I'd like to bring here is, for example, if you look at a business where you have maybe older production facilities or maybe with boilers or ACs that kind of take up a lot of energy, and the cost actually in operating such a facility would be far greater than the investment that would go into making it much more sustainable. And also looking from a regulatory perspective, with impending changes, if you do not get onto the bandwagon and make the change, you will always be on a catching up mode. So these are some areas that people need to think about if you're not already on the bandwagon.
Shailesh, you started the conversation talking about managing financial capital, right? Right at the outset, you put that on the table. And when you're looking at how this can be done in a market like Sri Lanka, right? And let's be real, we're talking about large listed companies. We're talking about also a lot of medium-sized companies that may still be linked to global supply chains because they're exporters. How can they make this work? Is it working for them? Finance, and how can they make it work? How can they do better on this front?
No, absolutely. Sustainability, I would like to answer this question with a spin. The way I got into this field. I got into this field because it's not philanthropy only. That's important.
Sure.
The CSR, absolutely important. But for me, CSR is with an impact. Measure the impact, relate back to the CSR activity. Same concept relies or applies for businesses. In Sri Lanka, especially when we are on this growth journey, economic revival, it's very important that we got a brilliant opportunity not to follow the track the West has done, right? We can be more efficient, we can be more impactful. Now, Sri Lanka, let's think about 5 areas in Sri Lanka: export, tourism, and certain sectors. If you look at these 3, then when the whole revival is happening and access to capital, Ruvini mentioned it so well, access to capital comes in, with that certain conditions come in, you are looking at your business strategies from the lens of how to maximize the impact from that financial activity, right? So that's financial I'm talking about. So your own money, you want to run the business, but every time you apply, let's have certain sense of ESG lens to it. So that's one. Second, how to make it work? You're right. Take baby steps. Absolutely important. Clear, well thought out policies and systems in place. Sustainability is not about going out and rapidly taking an action without doing proper diligence, global understanding, alignment. So the second step here for businesses is having a 5-year sustainability plan year on year, having measurable 3x3 matrix. What's important? So do something called double materiality assessment. That's a legal requirement nowadays for companies to report under various frameworks globally. Let's look at India. India has, the SEBI came up with BRSR, Business Responsibility for Sustainability Reporting. Let's look at, I always say, this is my terminology, the Bible of sustainability called Global Reporting Initiative Standard, GRI.
Yeah.
They all require you to do materiality assessment. Out of European countries under EU taxonomy, various reporting requirements are coming in and they want you to double materiality. Now what they are? It's all about impact of your activity, as I said, overall sustainability activity to the world and the world's activity, or say climate change as classic, on your businesses. So do a robust materiality assessment and focus on what matters. Now with that approach, if you go, then think about the challenges. Now, Sri Lanka, like any other middle income emerging market, let's think about capacity and capability there. If you want to understand the financing side of it, sustainable finance as one example, let's think about sustainable finance from the lens of, do we have the right people with a solid understanding of a field which is new and evolving? Do we have it in-house in the country? Some of the financial instruments which are required, like blended finance, right? Do we understand? Do we understand how we can learn from other countries, Bangladesh, Kenya, right? Philippines, Vietnam, in and around where we are working, and even if not around, Kenya is far, but what's relevant? So how they are financing these, say, renewable energy projects or green projects. What kind of funding is available through climate finance, right? What are some of the global funds? What kind of projects have been already funded with what conditions and requirements? So if they go with that approach, let's learn, let's take baby steps, and their growth path on sustainability will be faster, more efficient. So that's the way I would look at it.
In which sectors do you think, in a Sri Lankan context, Ruvini, sustainable finance would best work given the lay of the land currently?
As Shailesh mentioned, Shamindra, I think when it comes to structuring finance, I'll first speak in an overall
Sure.
sense. The structuring of that financial instrument, I think there are many global examples and examples closer to home that we can emulate and take lessons from.
Uh-huh.
But Sri Lanka has its own challenges as well when it comes to accessing finance globally. Because of the economic crisis, we currently have a situation where the country rating needs to get restored. So once the external debt restructuring process is completed, we expect the country rating to be restored. And that will be a significant determinant of how investors look at Sri Lanka. So we need to have some of the macro factors in place, including policy consistency around how different sectors which will attract this type of foreign financing will be affected. We need consistent policies because these are long-term financing instruments for the next 5-10 years. How will the policy be affecting those sectors? That needs to remain consistent. And then, of course, comes the all-important question of what would be the cost of that finance. And that cost needs to build in country risk. It needs to build in currency risk if you're getting it from overseas. And then we need to have parties who are willing to share in that risk matrix and allocate the risk among themselves and structure the finance in a manner that is commercially viable. As Shailesh very correctly pointed out, there are also options of blended finance where you have a grant component as well as commercial finance. Blending it together can also be a solution for countries like ours, which are looking for cost-effective financing solutions. So having said that, I think the sectors where this would be most attractive at present, given the country reality, is our transition to renewable energy. That's a no-brainer, right? So we all know we need to, in a big way, transition to renewable energy because right now we are so dependent on fossil fuels for generation. And you actually see that the government has made huge steps in this regard. A lot of renewable projects are being bidded out. No doubt the developers would need access to good quality, cost-effective financing for this. So renewable energy is one area. Another key area would be public transport. Again, transport, I think, is one of the larger sources of emissions in Sri Lanka, and hence modernizing the public transport fleet and going towards cleaner technologies in public transport, electric vehicles and e-mobility would be another area of financing. And I think India has wonderful examples of how e-mobility was enabled through effective, sustainable financing instruments. So those are two sectors I would pick as immediate. And of course, when you take some of the other key sectors for Sri Lanka, I think tourism, agriculture, those industries would also significantly benefit from sustainable financing. And again, the whole point lies in how you structure it effectively.
Sure.
In a manner that suits the commercial viability of each of those sectors.
Zahra, coming to you, I mean, and also coming from where Ruvini is stopping, if you look at the laws and regulations surrounding sustainability broadly, which may then in turn impact how financing of these operations can potentially happen. What are the changes that we are seeing or in the horizon that corporations or organizations should start thinking about now?
Okay, the good thing is, look, the sustainability landscape is evolving, and in Sri Lanka, like Ruvini and Shailesh, I think alluded to, there's lots being happening on the sustainable finance side of things. Look, the central bank has come up with a roadmap, then also come with directives to banks on how to report, meaning disclosure, sustainability risks, looking at all these aspects. Then also on issuance of corporate bonds. So all these guidelines are there already. And the stock exchange is also come up with voluntary reporting standards on based on GRI. And more recently, they've also come up with, I think, guidelines on bond issuance. Right? So all these things are happening within the landscape. The thing is, in Sri Lanka at the moment, as it stands, it's a voluntary reporting mechanism. But from 2025 onwards, it will become mandatory for the top 100 companies listed in the stock exchange.
Sure, right.
So what it means is the SLFRS 1 and 2 is coming into play, and the S2 is on climate reporting. So climate reporting is at the forefront. While corporates have been voluntarily reporting over a long period of time, deeper climate reporting on actually scope 3 emissions, it's not something that corporates have really got into. So this requires some level of looking into decarbonization, having decarbonization roadmaps, collecting the data, because it's about collecting emission data of your value chain.
So it looks like, Ruvini, there's going to be a bunch of changes that are going to be driven by the regulatory aspect, even if companies aren't stepping forward right now. What do you anticipate will happen in the sort of landscape for sustainability finance raising? Will this accelerate the need for doing that in Sri Lanka? Because, not just for financial institutions, but even on the reporting standards, etc., there is a demand for this. Do you think this will sort of jolt the system in a way?
Yes, no doubt it will, Shamindra, because these are all very complementary processes, right? As the regulatory framework steps up and you need to start reporting and tracking and measuring what you do, and not only yourself, as Zahra explained, but your entire value chain, then the ability to access sustainable finance will also become easier, because sustainable finance providers also require you to do a similar process of tracking, reporting, and being accountable for the use of those finances. So one of the important things would be what will the sustainable finance be used for, the purpose of funding, or the users of that pool of funds. And then during the course of the tenure of that financial instrument, you need to be tracking and reporting on whether those objectives are actually being achieved. So that's the verification process that one would expect to see in a sustainable financing instrument. And some bonds are also linked to sustainability targets. So you can have bonds or instruments which are backed by sustainability targets, but you also give the users of capital a certain benchmark to achieve. If you exceed that, you can actually be rewarded by lowering the cost of finance. Your finance cost will be lowered if you are able to match the target. But if you don't, then you pay the normal commercial rates. So there could be bonds which can get structured to actually encourage more the move towards sustainability as well.
In Sri Lanka, sovereign debt restructuring, we are talking about a similar thing, not with regards to sustainability, obviously, but with regard to economic growth, performance and growth. But it's fantastic to understand that this is already available in this landscape. Shailesh, for a Sri Lankan company, this may sound fantastical. Is this real? Can I commit to sustainability targets, raise financial capital, and then be entitled to a lower cost of funds if I meet or exceed those targets? Is this real? Can this happen?
No, absolutely. And it's happening. It's happening all around us. Let's not go very far from where we are sitting. Think about, Ruvini mentioned green bonds. Let's look at, just guess which country issued in the whole Southeast Asian region the biggest number of green bonds. Indonesia, 5 billion. Already done. India is coming up. Philippines, the other companies are coming up. So it's already happening, right? So first is understanding this landscape of financial sustainability or sustainable finance or impact investing, whatever you call it. But let's think about why they are needed, and then we'll understand why it's coming. I want to help Sri Lanka and surrounding countries in climate adaptation. Very specific adaptation. Think about the countries we are talking about here. Our per capita greenhouse gas emissions are very low. If you go after actual absolute emission reduction, which funding is coming, I think I'm reading a report, a 2022 report said $60 billion have come in, and around 40-ish have gone into mitigation. The rest have gone into adaptation, right? So both are important. For these countries, if you have your nationally determined commitments, NDCs, to the world, you have to reduce your emissions. You have to manage those emissions, absolutely. But please understand what impact it will have. The impact would be more in managing adaptation. Your physical assets, cyclone, hurricanes, right? Ecosystems, infrastructure, tourism, and critical sectors, energy and others. So you want to adapt and reduce the risk at a moderate level, right? The impact. So with that in mind, when you look at, it's important that you essentially understand what kind of this funding is available. Second, the other kind of funding, I'll come to that, this kind of funding is impact investing. I want to go and help the farmers, ethnic minority, you can say community, and help them, right? Okay, what kind of finance? Microfinance, mobile microfinance, right? Okay, that's available, that's happening. Then think about infrastructure. EVs we mentioned. India came up with FAME 2, pretty good EV infrastructure investment. We are seeing, so I can talk about Amazon is doing something called the Climate Pledge. It's just one example. Think about under the Climate Pledge, you bring all the participants together, and when they sign the Climate Pledge, they have access to EV charging stations, right? And so a lot of these things happening. And then the money comes in. Then talk about international funds, some of the other funds, right? Climate change, sustainability. These funds they work around the way Ruvini mentioned, but they are all about very specific activity, right? Renewable energy, right? A lot of these projects are coming, renewable energy projects. But let's think about why they are coming, why they are needed. A simple concept. If it's so good, anyone can come and invest, right? The risk, to manage the risk, the initial risk, till the projects become profitable. If I want to come today to Sri Lanka and want to invest, I may have my doubts in terms of the safety of my investments, may or may not. But if I do, how I manage that risk? So can someone come in and manage that risk for me for the first 5 years, 3 years? Yes, and that's what we are talking about here. Apart from when I perform, the reduced rate and all that. If you think from that, and trust me, numerous example, we don't have to go far, in and around our country here in Sri Lanka, proven, and why they are working, because they are needed. Very well thought out investments.
Just also wanted to add, because I think Shailesh slightly alluded to it. Other than climate, we are also talking about social aspects, financial inclusion, aspects of looking at social bonds, because I think we spoke a lot about the climate aspect itself. But when it looks at sustainability, we are also looking at those aspects, bottom of the pyramid. How do you bring them together? About the farmers, the benefits it can reap, in addition to bringing climate benefit. It's about livelihoods. It's about getting money to the bottom of the pyramid. It's about inclusion. It's about getting gender inclusion. All these aspects are also getting covered in these bonds that we are talking about.
What strategies, if at all, Zahra, can businesses adopt to mitigate the impacts of climate vulnerability, given that Sri Lanka is a country with a high exposure to a climate risk? And Shailesh was just talking about that potential actions that can be taken. But if you apply that to a Sri Lankan context, Sri Lankan standard, where are we and what can we do about this?
Yeah, like you rightly said, Sri Lanka has been among the top 10 climate vulnerable countries in the world, right? So when you look at it,
it's a top 10 climate vulnerable country
within the last few years. If you look at it,
okay.
yes, based on climate vulnerability risk index. Yes, and like you asked, okay, what is it that companies can do? When you look at corporates, of course, it would vary based on the sector they are in, and maybe geographically where they are located, and also maybe on their own interests. But generally, if you look at it, what is it that corporates can do? The government has already identified, like Ruvini alluded to some of them, what are the key mitigation areas that are the government's focus, as well as adaptation areas. So when corporates are looking at some of these projects, it would be best to look at how the country can reach these NDC targets and getting into some of those areas.
You have to demystify NDC for us.
Nationally determined contributions. That's our commitment in terms of how much we are going to reduce.
Sure.
In terms of our carbon footprint. We've committed to reduce 14.5% between 21 to 30. And then also we have said that we would go into 70% renewable. At the moment, it's somewhere like 40%.
Sure.
Like Ruvini said, so there is huge potential there. So these are areas that corporates can actually get into because it is something that is needed and identified in our own strategies. When you're looking at it, so the key is to look at complex projects like Ruvini and Shailesh mentioned that can bring all stakeholders together.
Right.
Because these kind of issues need a multi-stakeholder engagement for it to see better results rather than individual companies just trying to do. So some of it is, of course, individual company driven. I'm not saying that everything has to be, but some of the bigger impact projects can be where corporates come together and do. And also corporates need to look at taking their own net zero targets. Because if we are to reach these national commitment levels, companies also need to come up with their carbon reduction, decarbonization plans, and also take up net zero targets that will contribute towards government meeting these, commitments.
Just for clarity, when a sovereign commits to impact reduction target, are usually corporate net zero targets regulated, or have these always everywhere been voluntary?
That's a great question. When I started my career, everything was voluntary, except pollution, maybe.
Sure.
As the world has evolved, then think about focus on safety, environment, health and safety management systems. Then think about IFC performance standards. Those requirements came in. If you, for example, if World Bank is financing a project, they would like to see the impact.
IFC is the World Bank's private sector
development fund, the development fund, absolutely. Those things I have seen over the years. But what has happened? And then the world of GRI came as a framework. Use this, you want to report, you have a KPI and all that. But now, it all started with stock exchanges in the region. Stock exchanges would say, can you please look into the reporting from comply and explain basis? Either you comply or you explain. Right? Then you would say, okay, that has gone well. Now tell us, companies who are mature, they want to report, they want to control the narrative. Then let's come up with requirements in a phase out manner, right? Or step up, as you say. So India, top 1,000 listed companies, they have to report. Let's look at our country, Sri Lanka here. Sri Lanka has voluntary requirements this year for top 100 listed companies, and making it mandatory from 1st January 2025. Great. It also has a green finance taxonomy looking into, right? Now, when we look at stuff, some of the stuff we are talking about, you certainly realized that companies will come in, they will report. When they report, you have a level playing field. You can compare the companies. Those reports, when they go out to the world, a young analyst sitting somewhere in Europe, as an example, he picks up the report and compares the two reports. Then something called ratings come in, right? And they are already working, but let's think about. Let's rate, right? Because I need to make a sound decision. I'm sitting in Australia, I want to invest money. Let's see this company or that company. That report is crucial, right? Now, this structure of level playing field in the country helps you report. Now you would say, but how I know that report is credible, verifiable? Think about mandatory assurance. In Europe, it's review, limited assurance on everything. In India, it's reasonable assurance, full financial audit on something specific, right? And of course, limited assurance on the rest. What it means, your process governance, your data governance has to be very sound, right? Because if you want assurance on your information, which is non-financial, which is expanding, like India is also expanding it to SMEs, right? You're also thinking about your value chain reporting, which you mentioned, Scope 3. Scope 3 is essentially greenhouse gas emission outside your operational control. Then you want credible information. Then think about technology. That's the next step. You need technology to be able to fetch the right information, make a checker mechanism in your organization, and how you can really track responsible supply chain. And those regulations are already here. If you look at Europe, it already has requirements for transparency in supply chains. Europe already has something called carbon border adjustment mechanism. So think about some of the sectors we operate. Steel, as one example, cement. If I'm exporting that, I need to know the internal carbon price, because then I know if tomorrow someone comes with a penalty for that, I'm ready, right? And that's already happening. It's already there, right? So companies have to really have this internal carbon pricing in place. And finally, when you look at this, something which is absolutely required for emerging markets, controlling the narrative. I use this a lot. Because look, we have very peculiar condition. As much as I want green power, but I want affordable power. I want reliable power, the trilemma I call it. How can you really have all three, right? Can you really phase out coal in 24 hours, or 24 months, or 24 years? That's the question. Or you want to really understand your typical case for the country and tell the world, yes, but this is what we are doing in a credible, well thought out manner. So this is my view around that. Yeah.
Ruvini, the EU has just announced tracking sustainability across your supply chain. And there's a lot of Sri Lankan companies that export to the EU or are part of supply chains that go through the EU. Are Sri Lankan companies ready for this? What's the likely impact of this new law?
So many Sri Lankan companies who are currently exporting, I think are already getting ready for this, Shamindra, if not to a greater or lesser extent. Many of them have recognized this and they are getting themselves ready. So I believe how these regulations would pan out is that there will be initially a couple of sectors which will be actively tracked. And then after that, there will be more sectors that will come into play. So we need to see from in terms of our export basket where we actually have to start complying and being accountable for these carbon taxes on the border, right, when we export. So we'll have to see at what point our export basket actually gets affected, number one. And also in this journey, again, what is it that you have to track? So another important component of this would be traceability. As you know, a lot of our export-oriented industries also import a lot of raw material as input. So which means when you really look at that scope 3 that Zahra was talking about and what your supply chain is actually exposed to, right, in terms of emissions that they do, when you're tracking that, you need to be able to trace back to see the exposure of your supplier. So your entire supply chain needs to get visible. So this is a challenge because Sri Lankan firms they do import a lot. So they need to go backwards and see what's happening in the supply chain, as well as looking forward to see what they can do themselves and when they reach the end market. So it is a challenging process. And I think a lot of the techniques, standards, and processes that Shailesh was speaking about will become important starting with the export companies because they will be the ones who are most challenged in the immediate future.
Zahra, what role does diversity and inclusion play in the ESG strategies of Sri Lankan companies? We've been talking about supply chains, financing, but here we're talking about something very internal, about diversity and inclusion policies. And do these policies part of the agenda that is visible elsewhere to the customers, to the supply chain of the diversity and inclusion within an organization?
So when it comes to companies that are reporting, Most of them do, because GRI and other frameworks require you to report. But looking at Sri Lanka, so some of the challenges in terms of where is it that we need more women's participation. Look, of course, when it comes to the education system, there's more women in universities and educated. But when you look at the workforce, we have only about 35% women in our workforce, right? Given the current context and the economic imperative that we have, we really need to get more women into the workforce. And also another challenge that we see is when it comes to certain industries, generally women moving on to higher management roles. And even I think in 2021, when we looked at women in boards, there was a study in Sri Lanka of the Colombo Stock Exchange. It was something close to 10%, if I'm not mistaken. So there is more room for inclusiveness for women, especially when it comes to higher, areas where in corporate.
Are you also suggesting in some way that these are material enough to be impactful on organizations' overall sustainability goals and how they rank, even globally?
Yes, there are repeat and ample number of studies that show diversity and inclusion has a significant impact on corporate returns, net profit. There are large number of studies that showcase this, and even in Sri Lanka, I think increasingly there are more women getting into board positions, but there is still more room to improve.
However, in the region, Shailesh, you were talking about, I think Indonesia has done $5 billion, you said. I mean, Sri Lanka's debt that requires restructuring is approximately 12 billion. To put that into context, Indonesia has done already $5 billion. How viable is this as part of a longer term strategy then, Shailesh, for Sri Lanka to explore?
Talking about its future. How we plan our future with money and from where we can get that money. And then we are bringing in sustainability as a boardroom agenda, right? Or climate change. Sustainability has D&I, social. So let's look at it holistically. So one is to engage with the right experts like Ruvini, right? In terms of sustainable finance. What PPP arrangements we have, public-private partnerships. What we have under Global Climate Fund, Global Environment Facility as funding. What development funding organization, right? You mentioned IFC, World Bank. What they have for us, what they have done, what it requires. What kind of even intellectual input they can provide. Why not, right? Let's look at that. Then also look at, those microfinance and impact investing, as I mentioned. If we really look at the range of these, then you see, so this is already happening. So let's learn from it, as I mentioned. And let's plan a very well thought out future. Take a good stock of the projects that are happening, and then let's plan it. Again, I said, and I'm talking about what has happened in the past, globally, even Sri Lanka, well thought out policies. Sustainability is not a fad. It's all about due diligence. Responsive supply chain is one example. I'll close it with that. Am I doing enough due diligence on my suppliers? Am I doing supplier audits? I'm sending people on the ground. Can I really track my traceability, as you mentioned, of my supply chain? Am I doing it or I'm not doing it? So those kind of things needs to happen better.
And can Sri Lankan companies tap international support in sort of both in terms of strategizing around the ESG agenda and also obviously reporting around the ESG agenda, which is, I suppose, a far easier thing to do once you sort of have it embedded in your strategy. What's the scope of that for a CXO sitting listening to us here about, where do you start? Is that available?
So that know-how, Shamindra, is widely available in the region as well as globally. So again, I refer to what Shailesh said. Many of these have been tried, tested, practiced, mistakes made, lessons learned, and processes improved. So that's really where a firm like Deloitte, for example, would be able to provide that input from a global perspective, because we work across our network firms and Deloitte South Asia along with the Asia Pac region. Collectively, that wisdom is available somewhere. And there is no need for us to kind of repeat or reinvent the wheel or go through those learnings again, because I think the best practices are available and that can be done. And more importantly, I think also in accessing this finance in particular, That's something that where we need to integrate with people who have a regional and global presence, because that the points at which you access, where you access, how you have to comply to access those pools of financing would be, again, there would be tried and tested case studies across the region, which will be valuable to us.
And Zahra, I'll come finally to you. Ruvini is talking about the availability of the expertise, and also, how important it is to work with a bigger network so that you can figure out where this finance is in the first place. If you look at the practice of this on the ground in the last couple of years, in which sectors, in which areas have you seen the greatest movement from your experience, from your vantage point at Deloitte?
At the moment, what we see is a lot of traction from the financial sector, Chaminda, because there is interest, again, partly because the regulator themselves are
Sure.
bringing in regulation, because regulation has been the driver, not just in Sri Lanka, in all other countries as well. That has been the first step. So it kind of mandates disclosure. And for you to disclose, you need to do something, right? So financial sector clearly is the driver. And also we've seen lots of other companies also taking up, though, corporates like conglomerates are also in the look, because one of the other areas is lots of people have, CSR has been there for a long time. So people have been doing good for a long time. It's about integrating that into your mainstream business operations. And like Shailesh rightly said, it's about picking the most material aspects to you and, go with the first few, get a maximum impact. So what corporates are looking at now is actually bringing all their different aspects of CSR, when you have multiple lines of businesses, bringing it together and bringing an integrated strategy. So these things we see are kind of happening on ground at the moment.
If I can add on something there, Shamindra, I think a lot of the financial institutions, apart from the green side of it, the E part of ESG, also see a lot of potential in the S. So many financial institutions today are pursuing strategies to address the SME sector in Sri Lanka. We all know by far it is one of the largest contributors to economic activity.
Sure.
They were also more severely affected during the crisis, but they are also a big part of activity, and hence they need to be supported. So the social element, the S part of the ESG, is also quite critical for Sri Lanka. Again, I'm just emphasizing or re-emphasizing a point that Shailesh made previously, is that when you're tracking data and information related to a lot of fragmented parts which make up an MSME type of framework, you're looking at supply chains, you're looking at end markets, you're looking at a whole host of people who are stakeholders in this MSME process. That's a lot of data and information you have to deal with. And the use of technology also becomes quite critical in achieving this objective, right? So you make life easier and you make it more streamlined, and you put your data into a platform which is easily discernible to people by using technology. So I think in this entire ESG journey, the use of technology also becomes quite important to just make life easier for yourself in tracking the data.
And Shailesh, will come for last words from you. Let's round this off.
All right, let me do it a little differently rather than sum it up. Technology. I like to finish with technology. We mentioned there are a lot of information available, as Ruvini mentioned. I also said that. Let's think about what are those technologies. Let's use those for what we have discussed today. If there is an agriculture supply chain impacted by weather patterns, let's see who has done in the region a good job using technology. Thai CPG Group, one example.
Right.
They have done climate risk assessment around that. So what they have done, have they used technology? Who has that technology for climate risk assessment? My team has it, as one example. Other people have it. So physical assets, physical impact, transition impacts under guidelines like Task Force on Climate-Related Financial Disclosure, as one example, TCFD. That's part of Sri Lanka financial reporting standards as well. On climate change, linkage, we need to do it. If we have to do it, let's use through climate change technologies, or in this case, climate risk assessment models. Let's think about circular economy. What's happening in, say, Japan, RICO, as one example. The company is doing extremely well when it comes to circular economy, right? Tracking the life cycle of their waste and everything, right? Using technology. In India, life cycle assessment is very much part of the regulations, right? To report, it's optional at the moment, but companies are doing product life cycle stewardship assessments. We need to do more and more of it here. Finally, Singapore National Water Agency, PUB from name, and I think that's the right name. What they have done, they are monitoring water usage, right? Using IoT and sensors. Finally, you mentioned decarbonization, Zahra. Absolutely, net zero pathway, right? When you go on that pathway, there are certain steps you do. Common sense energy efficiency, renewable energy in different scenarios, new energy, and of course, carbon markets. I'll come to carbon markets in a minute. That's also another linkage to the finance side, sustainable finance side, which we haven't covered. So let's look at that. There's some proven case studies in the region who have really done well on carbon markets. Carbon market is reviving, is again coming in terms of the requirements in those countries, will come here as well. But then coming back to technology, if I want to do this net zero, how about I have a common platform? I click, the certain sectors come in, and they are proven techno-commercial understanding of existing technologies, upcoming technologies under one. Just one example, green space. Our friends at Deloitte in Australia have done phenomenal work through something called green space, right? You go, you access, you understand the sectors, you understand the technology. That technology, let's be honest, this whole net zero realization can only happen through technology. As I always talk to my son, and he's a sustainability champion in his school, the apple doesn't fall far from the tree, right? And I was talking to him, and he's like, you won't be alive, Shailesh, till net zero happens. And I was like, no, I won't be alive. Yeah, only technology, right? And that's so true, right? But look, technology. And when you shoot technology wisely, that will make it more efficient. What we have covered is overall boardroom agenda of ESG, absolutely important. I'm a firm believer that sustainability needs to make sense to the business. I always say sustainability, let's make sustainability work for the businesses and businesses work for sustainability. It's not one way. Never. I never go and preach clients to plant 5 trees. I say plant 5 billion. Let's make a business case about it, right? So that's where I think it all comes down to.
Shailesh, Ruvini, Zahra, that's been a wonderful conversation. I think we covered a tremendous amount of ground. It was a pleasure having you here in the studio with us.
Thanks, man.
Thank you.
Really appreciate it.
Thanks.
Thank you.